Marico just released its first quarter numbers. The numbers were flashing just a while back. Mangalam is here with the fine print and how the numbers are looking. I think there's 4% volume growth. Mangalam, take it away.
Well, the reported numbers are largely in line with street expectations because, the company had given their first quarter update itself. So revenues of just shy of 2,700 crores, largely in line with street expectations of 2,675 crores. EBITDA 626 crores. What is the street working with? 631 crores. And net profit at 474 crores, mildly above street expectations of 462 crores as well. Volume growth of 4%, again in line with 4 to 5% sort of guidance that the company had given. At the same time, the expectations of the street were of that itself. Gross margins at 52.9% is a big positive. Domestic revenue growing at 7.4% is another positive. And the company, while it's ramped up ad expenses year on year, there has been a slight moderation quarter on quarter, but that could largely be on, seasonality factors itself. What's good is the management commentary that has come in. They expect sectoral volume trends to sustain in the improving trajectory. In fact, they are gunning for robust revenue, volume-led growth going forward as well. In fact, they expect a gradual uptick in the growth of their core categories. As we can see at the bottom of the screen as well, some updates coming in on their growth businesses, which is food and the digital premium personal care verticals. They expect this to be between 20 to 25% of growth rate going forward, with also food and personal care contributing over 25% of sales by FY 2027. Right now, that number is sub 20% itself. Domestic share of foods and premium personal care will expand to 25%. They're on course to deliver double-digit EBITDA margin in Beardo this year, and also a strong operational turnaround in some of the acquisitions that they've made, and expect the consolidated revenue as well as volume trend to continue to move upward, and that's a positive. That explains why the stock, it was already up before the numbers, given the tailwinds that we're seeing in the FMCG sector, but good performance, even better commentary has led the stock even further higher, even in a wobbly market.
Okay, thank you very much for that. Let's